Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, 17th day of September 2020, and this is the daily report for gold and silver. We had the opposite reaction that was expected by many analysts, including myself, in terms of how the precious metals, specifically gold and silver, would trade following the announcement by the Federal Reserve that they will maintain a near zero interest rate level till the end of 2023. Nonetheless, traders and market participants speak with their dollars, and today they spoke that gold and silver needed to go lower. The question is it a short-term move, or is this the beginning of some sort of a sizable correction? Throughout the end of this week, meaning tomorrow as well as next week, we will look at technical studies in attempts to answer that. But first, let's take a look at price action today. While the statement and press conference by Chairman Powell underscored the fact that the Federal Reserve is committed to keeping interest rates near zero at least till the end of 2023, which should have been extremely bullish for gold and silver, the opposite occurred not only in gold and silver, but in U.S. equities. Gold closed down $19 and is currently fixed at $19.5150. It did affect our trade. In fact, we were stopped out with a small profit. We'll cover that in detail during our technical studies. The same thing occurred when we look at spot or Forex gold. That also closed lower to the tune of $15.10, closing at $19.4390. Silver sustained a pretty large drawdown, almost 0.8%, 27.25. That was the closing price, and the low in the market was 26.40 cents. That kept us long and active, our current silver position. As far as our trades in the ETFs, we're looking at GLD. That closed at 182.96, down a little over 0.5% or $1 per share. We have our stop at 178.50, and the low today came in at 181.48. So effectively, we are still long GLD. SLV closed at 25.23. The low on the day was 24.51. We have a stop at 23.53, so we are still effectively long the iShares Silver Trust. Lastly is Nugget and UGT. We have a stop at 84.98. The market gave up about 3.5% today, down $3.55 a share at 98.85. Our stop is at 84.98. And traders, we will list all of the trades that we were taken out of in the proper action section found on the members page. Let's take a look at our technical studies. Traders, it is an extremely interesting reaction that we saw once the Fed released its statement and Chairman Powell's press conference, which really maintained their commitment to keeping interest rates low, which should be extremely bullish for gold and silver. We saw the opposite reaction. We saw gold and silver both trade lower. It's represented by this single candle here. The one thing that I find noteworthy and gives me some hope that we might see a continuation of the rally is this 50-day moving average, and the fact that the 50-day moving average matches up with the low that came in, I believe, at around 38. Of course, we were stopped out. We got in at 47, we got out at 52, and that is precisely where the market is trading right now. I recommend that we maintain a neutral stance until we can determine whether or not a couple of key levels hold. These are the same levels that we have been speaking about throughout the last couple of weeks. The first one being the 23% retracement at 1941, and then just below it is the 50-day moving average at 1938.40. We hit that low, but we closed just above it. Does not mean that we are out of the woods yet in terms of potential downside moves in gold and silver, But when we look at this chart, we can see that although it sold off in terms of a technical basis, we have not sustained any major chart damage because we did not effectively get a closing price below either 1941 or 1938, and those are the most key areas to look at. We'll maintain our neutral stance in gold for right now. Traders, of course, silver is a different story. We saw the same dramatic sell-off, but take a look at the candle that came in today. That is this candle here. So although we had this exaggerated low, and the low in silver came in roughly at 26.43, you can see that the open and close were very, very close together. In fact, we saw a recovery in silver, a recovery that we did not see in gold. We are still long December silver, and my recommendation is to maintain that current long position along with our long ETFs. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.